Yeah, this part of the lesson is based on special rules and connected persons. So just to basically start off with special rules, we need to have special rules once we've concluded that there's going to be VAT. Once we've concluded that there's going to be VAT, only then can we start thinking about applying special rules to particular transactions. And special rules are basically there to help us with the value of supply and the time of supply for particular unique situations that can arise where we've got, certain situations that give rise to special rules having to be considered. And one of those areas that would likely apply special rules in our firm would definitely be a connected person relationship, which is our next theme, which will likely go into more detail about on the whiteboard. But like special connected person is a very important topic in VAT, because that is a topic that tends to get tested quite a bit, and there's a lot of like volume of transactions that can always be demonstrated within a scenario of like a connected person scenario having to be prevalent. So you've got to be aware of what to look out for as well. However, you need to also not fall into the trap of being caught out in having to say, maybe you've been given a particular situation or background, and in that background you get to establish that there are connected person relationships within the background information that could be given to you. But you also have to be mindful in terms of like scrutinizing the underlying asset or cost that has been spoken about, because the next thing is you don't want to get caught up in is maybe getting into a conversation that only indeed there's a special connected person relationship, but only for that relationship to be transacting within a transaction that basically deals with like a denied supply. So a denied supply will always be a denied supply. So special rules does not change that. So you need to be very mindful of such situations having to basically be popped out at you, because an examiner would also likely want to catch you out. So if you're not very cautious in terms of analyzing your information properly and getting to be aware as to whether you have a vettable transaction or not in terms of, denied supplies, exempt supplies, zero rate supplies, or whatever the case, you need to be very careful in that kind of situation. So however, connected person transactions tend to be quite, plentiful within the scenarios that will likely get tested at, especially at an honest level. So be very prepared for that and look out for those situations. So in starting our lesson, we'll basically start off in terms of what to look out for in terms of connected persons and so forth. But since we're basically speaking about connected persons, we may just highly go into a high level, description of what to look out for in terms of connected persons. So connected persons, for our knowledge, and it's a definition which is well documented in that the legislature, it's really at your prerogative to also go into the legislature and actually confirm as to what the actual definition like entails. But basically, connected person can arise in the form of where people are related, where you have a certain stakeholding in a company, and there also could be unique situations as to you being connected to a particular company, and indeed you've been certified to be like a connected person to that company because you've got in excess of more than 10% in terms of the stakeholding within that company. However, you are not the one who's transacting with that particular company. There happens to be a transaction that happens maybe with your niece or somebody that you're related to, at a cost which is slightly below market value, then that gives rise to something that is called common connected person. So that common connected person is connected to the company because you are actually their uncle or their auntie in that situation, and you have more than 10% stakeholding in that particular company. That makes you a connected person to that company. As a matter of default, whoever would be related to you would also be a connected person if they were to transact with the same company that you have the stakeholding of more than 10%, and as a matter of default, that they then deemed to be common connected persons, irrespective of them not having a stakeholding or not. And the feature of you having more than 10% of stakeholding is a feature which is only prevalent for companies. Whereas if you are in a partnership or a close corporation, you don't even need to have more than 10% stakeholding. If you have stakeholding of 1%, you are still deemed to be a connected person. And you also need to be very aware that an employee and an employer relationship does not deem to make that relationship a connected person relationship, because one is an employee, the other person is an employer, unless if the employee themselves have more than stakeholding of 10% within the actual company, then that would make them a connected person in that regard. And you also have to be very aware that connected person rule is applicable to any unique environment. A trust can be a connected person, just as we've elaborated that close corporations, partnerships, and so forth can also be connected persons. So a company stakeholding of more than 10% by any one individual will deem those people to be connected persons to those companies. So the threshold of having a stakeholding of more than 10% in a company to make you a connected person is only applicable to a company, whereas in all other scenarios, as long as you basically have a connected person relationship to that company, irrespective of the stakeholding of more than 10%, you'll likely be a connected person, just as we've touched on the instance where you have 1% stakeholding in a close corporation or in a partnership or membership interest for that matter. So you begin to be a connected person, and also be very cautious of the common connected person scenario also being a prevalent feature as well. So that is the uniqueness of the connected person scenario that we'll likely get into, and we just giving you this brief description in terms of the connected person being a prominent feature, because we will not spend time on the whiteboard. We just rather have a conversation about that, which is what we've just done, and we'll basically get into scenarios that will now trigger special rules having to apply to a connected person transaction, having to actually feature with special rules that will obviously help us in terms of the determination of the actual value, and also even to determine as to what the value of the supply is, and what the type of the actual supply would be as well. Alright then.